Bitcoin isn't just like technology. It's not like a new weather app. It's not a new social network. You have to think about like governance, public-private key cryptography, economics, game theory, physics, even with Bitcoin's proof of work mechanism. Bitcoin is this pure digital gold that there isn't really another competitor to it. What's the monetary policy of the dollar? I don't know. There's sort of like inflation targets, kind of, but then they move those goalposts, and there's all sorts of changing objectives of the Fed. And what's Bitcoin? Bitcoin has a 21 million unit hard cap. There will only be 21 million Bitcoin ever to exist. A fixed amount, that's interesting. No, that's actually the breakthrough. I think that's the beauty behind Bitcoin, is that 21 million hard cap. That monetary policy is totally different than everything, including gold.
Yeah, and it's really never happened in human history, because every monetary system ends up becoming inflated because people print more, because they usually make emotional decisions that are subjective, sometimes subject to political waves.
And that precision in that monetary policy builds trust, and it builds trust in a way that gold can never have. What if Bitcoin doesn't follow its normal cycle? What if Bitcoin breaks the mold from its previous cycles? All of the pieces are in place for a super cycle to exist. What if the world has an event where people start to question the nature of the reality, where they question the nature of their money? Whoa, do I need to trust my government today? But what if there's a mass event where en masse 100 million people in the United States wake up and go, okay, I'm moving my money into Bitcoin.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is... This is London Real. I am Brian Rose. My guest today is Dan Held, the entrepreneur, cryptocurrency influencer, and Bitcoin evangelist. You are the director of growth marketing at Kraken, one of the world's largest and oldest Bitcoin exchanges, which acquired your company Interchange 2 years ago. You were an original member of the 2013 crypto meetup group in San Francisco, which included the founders of Kraken, Coinbase, and Litecoin, and you helped build some of the earliest and most popular crypto products, including ChangeTip and ZeroBlock. Earlier this year, you predicted that Bitcoin could go to $1 million, and you believe it will be the precursor to the extinction of gold. You've described hyper-Bitcoinization as the long overdue moment when the whole world will finally come to see Bitcoin's value. Dan, welcome to London Real.
Thanks for having me.
Hey, it's great to have you here. I can't wait to dive into all things Bitcoin and DeFi. You've watched it basically go from nothing to potentially $1 million a coin. I want to talk about that journey. Just a real quick background on me. I started my career at 22 years old on Wall Street trading fixed income derivatives at a company called Bankers Trust. They hired me straight out of MIT because I had an engineering degree. So I spent 15 years in the banking industry in New York, Chicago, and in London in the credit derivatives market. So I've seen all the nonsense that goes on there. The last 10 years I've been broadcasting on YouTube, and it's all been about kind of democratizing information for the people. Last year we got in trouble with all of the major technology platforms for freedom of speech violations when I thought we were just having conversations, but I literally got banned and deleted from YouTube, Facebook, Instagram, Dropbox, PayPal, which all of those things for those conversations. But we really thought that the freedom was really important. Earlier this year, I spent 6 months running to be the next mayor of London because I thought, you know what, I can make another video and complain, or I can try to do something about it. So we went hard to try to really make those changes on a root level. But on May 8th, I got told the results, and it's not what we thought. And so to be honest, Dan, I took a look at DeFi and I thought, wow, these kids aren't playing around with all of this incredible protocol. And we, for the last 6 months, have just been talking about crypto assets, DeFi, blockchain. I created an academy called the DeFi Academy. I've graduated over 500 students, and we've had kind of the who's who here talking about these things. And so I can't wait to talk to you about these concepts. For the record, Max Kaiser was in my studio in 2013 screaming about Bitcoin. I didn't listen. I had Andreas Antonopoulos here in 2015, 2017, and 2019 talking about the future of money before the word DeFi even existed. Again, I didn't listen. Now I'm listening, and I'm trying to get the message out there to everybody. And so, Dan, so excited to have you here. And also get maybe your thoughts on some of those freedom issues, because on your YouTube channel, which is incredible, you talk a lot about this. And I heard you also say that, I think you said that the dollar was one of the greatest scams of all time. And I'm wondering if you can tell me what you meant by that, and maybe through the lens of freedom and then ultimately Bitcoin.
Yeah, absolutely. To give you a little bit of background as to why I got into Bitcoin is I was studying finance in undergrad during the 2008 financial crisis. So when this crisis occurred, I realized that my textbooks were wrong, the professors were wrong, and everyone on TV that I trusted was wrong. And in that moment, I realized that we needed something different. We needed to replace trust in the financial system. And 3-4 years later, I discovered Bitcoin. And Bitcoin to me was that holy grail financial instrument that removed trust from the financial system, to where I didn't have to trust in bureaucrats or politicians or policymakers. I could trust in mathematics and physics. And that's what Bitcoin really represents. It represents a trustless system, a system where trust isn't required. And why is that important? Fundamentally, like, my core beliefs are more libertarian leaning, so more around freedom of speech, freedom of thought, freedom of movement, freedom of finance. And so for me, Bitcoin in a permissionless system where it can't be censored and can't be seized very easily, that is a system that is based on freedom. Similar to some of your content struggles where you might get banned from a platform like Twitter, YouTube, Facebook. Bitcoin was built to make sure that doesn't happen again with money. So never could you be censored because of your political beliefs. And I think that's a fundamental human right. Freedom and all aspects of freedom are fundamental to us existing. And for me, I think financial freedom is the most important. Who cares if you have freedom of speech if you can't make money or you can't spend money? And so Bitcoin enables that at a fundamental level. And I think even more beautiful about Bitcoin is that Bitcoin takes people who weren't formerly libertarian leaning or freedom oriented, and it nudges them in that direction. Because once they start to believe in Bitcoin, they start to challenge their other assumptions over why the government controls certain aspects over their body and other aspects of their money. And so Bitcoin is sort of the gateway drug, the orange pill, if you will, to a new sort of thinking where more people become a little bit more freedom minded, which means to me a little bit more libertarian, but I know a lot of people don't like to be labeled.
Yeah, that's a fantastic intro. It's funny, Dan, last year when we kind of outright fought for freedom of speech, people could kind of understand what I was talking about. Like, hey, I just want to have a conversation and I want you to have the right to listen to it or not and make your own decision. And when I showed people that that wasn't being allowed on certain tech platforms, most people said, yeah, that makes sense. And then when I was running to be mayor, I was on the street one day and I was surrounded by 10 police officers and 5 police vans, and they actually banned me from campaigning that day because they said I was breaking lockdown protocols, even though I was in the middle of the street talking to my phone. And when we fought back against that, it went viral and everyone said, that makes sense. That shouldn't be right either. But Dan, when you talk about financial freedom, I do think it's one of those last human rights that's being violated on a daily basis that we don't acknowledge. But when it comes to people's money, it's almost like we've been in this Medici banking system for 500 years and we don't even know how it controls us. And I think it was Terence McKenna who once said, I don't know who discovered water, but it certainly wasn't a fish. And I feel like we're sometimes fish in the water of a banking system and we don't even realize how much it controls us. Yeah, we see when OnlyFans has to change policy because of a bank and change back, you can start to see glimpses of the power of the financial structure. But do you still find it hard to convince people that this is a big problem and perhaps, like you said, the most important freedom of them all?
Absolutely. It's, that's why I call it orange pilling, because it does take, someone from a state of sort of accepting of whatever the financial system is. And it moves them to a new level of consciousness of realizing and waking up to what the world is. And so a lot of people like to be asleep. It's not, do you really want to challenge the underpinnings of the entire economy? Like, do you want to wake up and challenge your assumptions of God and money? And, money is one of those components that is, I would say, similar to like challenging someone's beliefs in God. Like, money is inherent with the state. The state is a set of government that controls various things that you do. So for someone to wake up and challenge their assumptions over why does this couple 100-year-old entity have control over me? And then also what is money, and the meta sort of thoughts about what money represents, and that money is just a belief system. This is a lot to take in. Yeah. A lot of people don't want to wake up on their Tuesday and go, I'm ready to challenge all my existing belief system. So I totally get that it takes people a long time to get orange pilled. And for me, it's sort of a calling of mine, and why I produce so much content. It took me years, right? It wasn't like a snap sort of moment. I was mentally prepped and ready for the message to be received back in 2012. But not a lot of other people had that same mindset that I did. So for me, I feel like when I create content, I'm making that ladder a little bit shorter, letting people spend less time. And that, it took me years to really fully understand Bitcoin, really get a good grasp around it. And by the way, I'm still learning on a day-to-day basis about various things about Bitcoin. So certainly it's a very difficult journey because, one, people don't want to wake up and challenge their assumptions. And two, Bitcoin isn't just like technology. It's not like a new weather app. It's not a new social network. It has vast overlaying architecture of, you have to think about governance, public-private key cryptography, economics, game theory, physics, even with Bitcoin's proof of work mechanism. So these are all intertwined together. So the people to get it first were a little bit more of a polymath type, folks who could kind of easily switch between disciplines. And I'm not going to say I'm I'm not, it doesn't take a high IQ to understand Bitcoin. So don't feel threatened if you're listening to this and you're like, oh man, that sounds really complicated. It's just more of there's nuance to it. You can understand Bitcoin at a very high level. And then the further you dig, you realize there's all of these really interesting concepts that are pillars to why Bitcoin exists and why Bitcoin was created the way it was created.
I like how you said you're still learning. I had Lynn Alden here about a week and a half ago, and she's quite smart. And she said, Brian, I've accepted that I'll never fully understand Bitcoin. And I just thought everybody exhaled when we said that. And I told my students all that. I said, you're never going to fully understand it. So don't try or beat yourself up because it's highly complicated stuff. I'm about 21 hours into, funny enough, Gary Gensler's class he taught at the MIT Sloan School in 2018 about crypto. Back before he was the head of the CFTC and before he was the head of the SEC. It's quite interesting to see that agnostic person. But, he goes deep on cryptography and hashing and all this stuff, and you realize how much you don't know. But also, you don't need to know. Like you said, you don't need to be a rocket scientist to understand that Bitcoin is special and it needs our attention. One question I had for you, Dan, is that I've had people coming on my show for many years talking about what's wrong with the monetary system and the dollar. I've had people like Jim Rickards come on and talk about the printing of money. Robert Kiyosaki's been on talking about that stuff, Max Kaiser. But honestly, until we had this Bitcoin instrument to show people, it felt like a lot of times it was the sky is falling and what do we do? And when I had Jeff Booth on our show a couple weeks ago, he said, well, Brian, price everything in the future in terms of Bitcoin and it's deflationary. You price everything in the future in dollars and it's inflationary. And it's like you can start to really see grasps of this reality. And I don't know, I found that this Bitcoin instrument is really helpful in maybe understanding that paradigm a little bit more. Do you find that the case?
Yeah, what's kind of funny about Bitcoin is that Bitcoin is actually easier to understand monetary policy-wise than your existing fiat currency. For those listening, fiat currency represents government money. So, what's the monetary policy of the dollar? I don't know. I mean, there's sort of inflation targets, kind of, but then they move those goalposts and there's all sorts of changing objectives of the Fed. And what's Bitcoin? Bitcoin has a 21 million unit hard cap. There will only be 21 million Bitcoin ever to exist. And that's all you need to know. It's a beautifully simple system. And in fact, the more I read about Bitcoin, the more I understood the breakthrough in monetary policy, the more beautiful it became. So why 21 million and why was it fixed? Why not have a perpetual 1% inflation, 2% inflation rate? So what's cool about the 21 million hard cap? So 21 million, the number itself doesn't matter that much. It could be 100 million, it could be 2 million, it doesn't really matter. All that matters is that it's fixed. Satoshi created a breakthrough in monetary policy because with the fixed money, there are two things that come out of that. One, there's no political attack vector to go squabble about what the inflation rate should be. So if there was an inflation rate, there would be a perpetual back and forth political battle between different factions in the Bitcoin community about deciding what inflation rate would be proper. The problem is choosing an appropriate rate of inflation is impossible based on mathematics. There's no way to parse, analyze, ingest all of this information about the economy to properly set the right inflation target. Instead, if you fix it, the economy moves around this fixed monetary policy. You don't need an inflation rate. And so that, one, reduces the attack vectors, and two, enables Bitcoin to be this pure measuring stick of the economy. So if we look at, for example, the kilogram or meter, those don't change. If those changed, it would be impossible to measure distance and impossible to measure weight. Well, with our money is a measurement system where it measures the outcomes of entrepreneurial endeavors and what it costs to pay for things and what I'm willing to accept as payment. So having that fixed quantity makes the economy extremely precise and measurable, whereas we've never had that before, where we're all constantly factoring in inflation, which is impossible to calculate accurately. And so with Bitcoin, we finally have that unit of measurement that is perfect, which makes Bitcoin for the economy an incredibly precise instrument. So, I think there's some incredible beauty around Bitcoin's 21 million hard cap that a lot of people don't appreciate. They go, oh, a fixed amount, that's interesting. No, that's actually the breakthrough. Yeah. And the fact that the Bitcoin community will never increase that amount, and that's getting a little bit nuanced here about how the social dynamic works with these protocols. But I think that's the beauty behind Bitcoin, is that 21 million hard cap. That monetary policy is totally different than everything, including gold. So for the gold bugs watching this, how much gold exists currently? I don't know. We know we can guess. And then how much gold will exist? We don't know. We can guess. But with Bitcoin, we know exactly how many Bitcoin exist today. We know how many Bitcoin there will be in total. And that precision in that monetary policy builds trust. And it builds trust in a way that gold can never have.
Yeah, and it's really never happened in human history, because every monetary system ends up becoming inflated because people print more, because they usually make emotional decisions that are subjective in the times, sometimes subject to political waves. And, I have a longtime guest here on the show named Jocko Willink, U.S. Navy SEAL, and he's got an expression which is discipline equals freedom. And it's a beautiful phrase. And it basically means that if you stay disciplined for your workout every day, to do what you say you're going to do, etc., you actually end up having all these wonderful freedoms. And I'd say the same is true about monetary policy. If you really kept the discipline, you would have the freedom of a money supply that really works. And yet, we violate our disciplines. We skip the workout. We have the bad food. We let it go when times are hard. And then we wake up one day and we realize we don't have the freedom because we don't even have a currency that means something. And that's actually the first time I've ever applied Jocko to Bitcoin, but I think it might work. I had a question for you, because you've talked about cycles in Bitcoin, where we go back and we look, every 4 years you can see it doing certain things. And yet now I've heard you talk about that now we're in something called a supercycle. And I talked a little bit with Ben Cowan about this, who's really good at kind of analyzing a lot of technicals. And maybe you can tell people why this is important, to even look at the cyclical nature, but then also maybe to evaluate how things have changed a lot maybe in the last 12 to 18 months.
For sure. Yeah, so Bitcoin's supply schedule, so we know that there will be 21 million Bitcoin, and those 21 million Bitcoin are printed over a very long duration. Now, the issuance schedule of Bitcoin is an exponentially declining curve. So what that means is that it has a decay function that approximates 21 million over a very long time. Majority of Bitcoin are printed early on. So Bitcoin, the number of Bitcoin that have been minted already are around 80% of the total supply, which I think is around 18 point something million Bitcoin. So Bitcoin are printed along a predictable supply curve. So everyone can go see how many Bitcoin are printed per block, which is approximately every 10 minutes. And then they can look at certain events called halvings. So halvings are where the issuance schedule of Bitcoin drops in half. So these halvings occur in a staggered function until Bitcoin reaches zero issuance. So what that means is, for example, during these halving events, the newly minted Bitcoin, the number of newly minted Bitcoins in each block drop in half. And these halvings occur every 4 years. So there's a hypothesis that these halving events create Bitcoin's bull and bear market cycles. And we've seen that true over the last 3. And so I've been in the space since 2012, and I saw one in 2013, 2017 and currently. So the hypothesis holds true, and I think it has some good fundamental reasons why. When a halving occurs, the newly created Bitcoin issuance drops in half. Every marketplace is a supply and demand network. If the supply gets cut in half, demand stays the same. Demand outstrips supply, the price starts to creep up higher. And as Satoshi hinted before Bitcoin had a price, so Satoshi wrote this back in 2010, which was incredible that he thought about this. Satoshi said, as the price increases, more people become aware of it and buy in expectation the price might go higher. He's describing FOMO. And he goes, that alone may spark Bitcoin into existence. And so I think that Satoshi planned these halving events to be these supply shock events that while everyone can see it, people still don't still accurately estimate how much it might influence the protocol. There's also a bit of reflexivity here of as the price goes higher, more people buy it, and then the cycle perpetuates. So over 2013, 2017, and 2021, we've seen that come true. The halving events occurred, by the way, in 2016 and 2020. So with these halvings, we see a corresponding boom come about a year and a half later. And so there's a normal sort of cyclical top and bottom that a lot of chartists look at, right? So people who believe in TA and analyze Bitcoin's price movements look at this bounded range of outcomes, and they go, okay, well, if it follows the previous patterns, we should, in this curve, Bitcoin's max price in this cycle should hit 100 to 300,000. That's actually a pretty good rounded estimate between all the strategists and analysts. So I hypothesized, what if Bitcoin doesn't follow its normal cycle? What if Bitcoin breaks the mold from its previous cycles? And I actually came up with this theory back in 2019 when people were pretty bearish on Bitcoin. That was close to the bottom of the bear market. And my hypothesis was, what if the world has an event where people start to question the nature of the reality, where they question the nature of their money? Bitcoin had grown post 2008 in a big booming bull market. There wasn't any event where people woke up and go, whoa, do I need to trust my government today? COVID brought that about. So in 2020, COVID was this huge shock to the system where people started to become orange-pilled as they saw their government's policies against COVID be very ineffective, as they saw their government's monetary policies of money printer go burr, be just really egregious. And this orange pill, a huge new wave of people into Bitcoin, including a lot of institutional money. And that's what I hypothesized is, what would Bitcoin's market cycles look like post-institutional money, post-sovereign wealth money, post-Bitcoin going mainstream? It'd be hard to believe that Bitcoin follows the exact same pattern that it did before. And so the supercycle theory says, what if it's different? Will there be a longer, bigger, more intense bull run? Or we could see maybe a normal bull run and less of a bear market, or something maybe sideways where there's kind of a long perpetual bull. Basically, will the cycle be different is the supercycle theory, or this could be one of the final cycles, where we see the whole world wake up to Bitcoin, surge into it, and Bitcoin goes from, 50,000 to 500,000 or a million really rapidly in a way that we haven't seen before, because people go, okay, yeah, Bitcoin was built for this moment. I get it now. We can't, you can't create those moments for Bitcoin where people get orange pilled. There are a certain number of individuals who lose faith in their existing financial system and they come over time. But what if there's a mass event where en masse 100 million people in the United States wake up and go, okay, I'm moving my money into Bitcoin?
Yeah, I still feel like sometimes when I'm looking at coinmarketcap.com that I might rub my eyes and open up them again and it'd all be like 3x or 5x. And I've watched financial markets for 30 years and I've asked myself this many times, could that happen? And I'm like, of course it could happen. Because, it's this paradigm shift, this adoption of technology. It's not like, the price of soybeans, et cetera. Now, there still are market dynamics and supply and demand issues and all that stuff. And I'm not predicting that will happen overnight. But it's not inconceivable for something like that to happen. And you mentioned institutional money. I mean, Michael Saylor was on this program and said specifically, CEO of MicroStrategy, what's he got, $7 billion of Bitcoin. It was that event and the monetary policy that followed that made him ask a very sober question, which is, am I acting in the interest of my shareholders by holding my treasury in dollars, or should it be in something else? And he went to look at property and gold, and he came up with Bitcoin. And, he really had the leadership to go all in on that. And it's been an incredible example of that. You mentioned institutions and sovereign wealth funds. We're still waiting to see kind of clear evidence of that, but I guess they keep things kind of quiet. Are you seeing anything there? And then finally, I want to get your answer as what will this super cycle look like?
Yeah, so we're now on the sovereign wealth side. We've seen a little bit there, more of like barely any action, basically El Salvador. But on the institutional side, we're seeing almost every legendary investor in the world come into the space. Paul Tudor Jones, Ray Dalio. I mean, these are legendary macro folks. Druckenmiller. You've got basically huge swaths of the existing hedge fund. I would say like thought leadership going Bitcoin is gold 2.0, which is wild because that's what I believed in 2012. So to see it come this far has been extremely validating. Because you got to realize back in 2012 we were considered fucking lunatics. I mean, people thought we were nuts. To be honest, they were like, okay, so you have a money that's not created by a government. Basically, people felt Bitcoin was magic internet money, and I wake up 10 years later, and you've got the most influential hedge fund macro traders in the world saying, "Yeah, Bitcoin's gold 2.0." Pretty cool.
Yeah. While we're here, can you speak on that? I mean, those early crypto meetups, I'm guessing in San Francisco, a lot of people wanted to be in the big tech plays, and they didn't necessarily want to take a gamble on this thing that it's hard for us to believe now, but was really out there back then.
It was a very risky career move. I didn't have a career in tech at that time. Like Bitcoin was my career starter in tech, but there weren't a lot of like A players in the space because of the reputational risk. And this is in Silicon Valley, supposedly the most open-minded place in the world. I mean, this is in San Francisco. Bitcoin was widely perceived as like drug money for terrorists. So like, for example, if I'd go on dates and I'd talk about Bitcoin, they'd be like, so do you sell drugs or something? And that was the 2013 perception in San Francisco. This is the tech capital of the world, right? So outside of that, the perception was even worse. So if you wanted to build a career, it was kind of okay, that's pretty out there, Wild West sort of idea. And there weren't a lot of jobs either. I mean, the space was tiny back then. I mean, you could fit all the executives of all the companies in the space into a big dining room. Let's put it that way. So there wasn't like a ton of career growth. There wasn't like a ton of learning you could have. And so a lot of people just built their own tools. And that's how I got into a tech career. Was I built ZeroBlock, which is the most popular mobile app for the space back in 2013. I didn't know what the hell I was doing other than being obsessed with building a product that I wanted to use. Turns out that's how you build great products. Being obsessed with solving a problem. That's a problem that I was solving. A lot of other people had too. The problem was they couldn't get the real-time price of Bitcoin on their phone. Well, Bitcoin fluctuates a lot and people want to see the price and they want to check it all the time. And so that's why I built ZeroBlock. And there were some other factors as well. But that early Bitcoin meetup group back in January 2013 only had like a dozen people show up. I mean, this was in the basement in San Francisco. This was in the basement of a former crack house. I'm not even kidding. It's called 20 Mission. 20 Mission was a reclaimed crack house that someone turned into a hacker house. So you had like 50 rooms up on the second story with a central courtyard and shared kitchens and bathrooms. So kind of like an adult dormitory. And so these are all kind of like tech hacker types. Downstairs is where they had the meetup, and it was a rough looking place. And they had a cooler full of PBRs, which for those who aren't familiar with PBRs are a very cheap beer. And so that was the early Bitcoin scene in San Francisco. But everyone at that time, and this is a very special sort of moment, because Bitcoin is only worth around $10. People either just loved Bitcoin or they loved building products on Bitcoin. And so that was a very special moment of like everyone was building or tinkering on something, whether they were tinkering on Bitcoin or they were building new software or tools. It was pretty exciting. I mean, and this included Brian and Fred from Coinbase. Like they'd show up to these meetups, and I remember when they hired Olaf and they brought him in. Charlie Lee from Litecoin, Jed McCaleb from Ripple Stellar, and then you had Jared Kenna from Trade Hill and the owner of 20 Mission, and also Jesse Powell, the CEO of Kraken. Like these were all the people in that early meetup. That's where I met all these people, and I jokingly say I'm the only non-billionaire of the group. So it was kind of wild being there. And then March 2013, price went from $10 to $260. Boom, 100 people were there. And that was, I remember VCs, Lightspeed Venture Capital was out there, and they were like handing out business cards. And I was like, whoa, this is like actually happening. You got to remember, this is 3 months into my San Francisco experience and tech experience, right? So it was sort of a rocket ship moment for me of learning like how, new exciting narratives in Silicon Valley ebb and flow, and how something can go from being obscure to in the limelight, being the hot thing. But it was a thrilling experience in early 13 because it was very hobbyist. And it first finally got into like mainstream press in 2013, where it became something more real and tangible for people.
Yeah, wow, that's really tangible the way you kind of described that, and appreciate the memory lane because you see this differently because you've seen it evolve. So when you talk about the super cycle or what to expect for the next few years, it definitely means something because you've kind of seen the birth and the growing up of this instrument. Just to finish on my final question, I mean, I know there's a lot of open-ended things that could happen on this super cycle, but what do you think is going to happen?
Yeah, it's a good question. I think all of the pieces are in place. If this was like a chessboard, all of the pieces are in place for a super cycle to exist. I don't think it's a super likely scenario. I brought it up because no one was talking about it. Everyone expected this cycle to be normal. So I brought it up as a low probability but possible event. I think all the chess pieces are in place for something like that happening. I could see some sort of systemic shock to the system, kind of reinforcing that. And as well, as long as Bitcoin's price goes up and people see it going up, then that creates reflexivity, where people buy an expectation of it going higher. And what happens when the world's financial system, including hedge funds, institutional money, all the sorts of institutional money and sovereign wealth money, FOMOs into Bitcoin? Bitcoin's price doesn't follow a normal cycle then. So does that happen now? Does it happen later? I think it's a low probability that happens in the next 6 months, but it's possible. I would say the most likely outcome is Bitcoin follows its normal cycle. The peak hits between 100 and 300,000 based on all of the other TA and analysis in the space of looking at historical prices and extrapolating them going forward. Again, I'm not recommending that this is going to happen. I'm just saying that out of a probabilistic event, this is what the space is saying as a whole. So most people in the space would say between 100 and 300,000 is the peak. And then super cycle would be something above, like, I'd say 500,000 at the peak, something like that occurring, or a very flat or distorted market cycle. So I'd say the likelihood that it's a normal cycle is probably closer to like 80%. Super cycle is probably like a 20% probability. Again, these are very rounded numbers, but basically what I'm saying is that, super cycle, we'd see something where Bitcoin goes above 500,000, really starts to exhibit some behaviors that are out of scope for this current cycle. But most probably, we're going to hit something between 100 and 300,000 based on previous cycles.
Yeah, and I really appreciate you saying that. And I've pretty much asked almost every guest we've had on, and almost exactly, they've all predicted, a 10x improvement of Bitcoin over the next 5 to 7 years. Nobody says 100x, nobody says 2x. It's just interesting to see all of the different minds, from influencers to people that run big funds, to people even involved in, the non-Bitcoin space, are still all kind of saying similar things. Also, the sovereign wealth is hard to overestimate. I mean, we haven't seen, I don't think, the Middle Eastern sovereign wealth funds jump in with all the oil money. And there's a lot of money there. So besides all the other institutions, which are important, dipping their toe in, the market will probably really feel it. I mentioned some of the other crypto assets, and I want to get your thoughts on something like Ethereum as compared to Bitcoin. And I want to get just all your thoughts around this. I was at a conference here in London, and Mike Novogratz at Galaxy Digital was supposed to be there, but they had beamed him in at the last minute. And he said to the audience, he said, look, Bitcoin is the digital asset play. It's there, it won, it's digital gold. We see that and we value that. And again, just to say, of all the guests I've had on, even the ones with layer one solutions, a lot of them say, I still keep 25 to 30% of my portfolio in Bitcoin. Almost all of them still say that. They still see it as a really important asset hold. Mike went on to say that Ethereum is the other plays. He said they're digital tech plays, and look at them as a technology company, what has the associate risk with that tech. Right now, with DeFi, most of the volume and, of course, gas fees are with the Ethereum chain, and we see kind of a layer one wars happening kind of right now in the last 6 months with the Solanas and the AVAXs and the Algorands and the Cardanos, many of we've had on the show, kind of fighting for that. How do you see this playing out? How do you view Ethereum? It's obviously not the perfect vehicle like Bitcoin because of their more flexible monetary policy, but how do you view it, and as also part of the long-term ecosystem?
Yeah, great question. I don't really view them as competitive. So I largely agree with Novogratz in that Bitcoin is this pure digital gold that there isn't really another competitor to it. like I mentioned before, Bitcoin's monetary policy, now there's a bunch of other cool innovations with it, but the monetary policy is the breakthrough financial instrument here. And so, when we look at other protocols, if they've changed their monetary policy frequently, which Ethereum has, that kind of takes it out of the running for being a sound money, a gold 2.0 type instrument. So Bitcoin, I think, stands unparalleled, unchallenged in that digital gold asset class. Certainly there are contenders, but I think that Bitcoin stands out single-handedly, kind of by itself. When it comes to these other protocols that we could call like smart contract platforms, DeFi, or kind of like world computer, these sort of all are largely bucketed under some of the more popular protocols, like you mentioned, Ethereum, Solana, AVAX, and Cardano. So I think that these are very much like Novogratz said, these are more like technology companies where, at a fundamental level, Bitcoiners and the Bitcoin protocol have preserved decentralization to enable it to be the best sound money in the world. And some of these protocols have traded off decentralization on various different levels. So you can trade off decentralization on the protocol level, on the social contract level, on X, Y, or Z. And so most of these protocols, what they do is they trade off decentralization to enable more functionality. So higher throughput or more expressiveness. And this isn't necessarily a bad or good thing. Bitcoiners just hypothesize that when governments attack these protocols, that they want Bitcoin to survive. These other protocols are basically taking the bet that that event is low likely event, and we have enough decentralization. We won't know until that event happens, is the TLDR. But these protocols on the kind of more smart contract platform DeFi arena, these all compete for various expressiveness, various throughput. And I think that there's a really interesting war developing between Ethereum and Solana, where Solana takes Ethereum and is willing to trade off even more decentralization for more expressiveness and more throughput. And arguably, it has a better user experience. Solana transactions confirm extremely fast. It's very low fees. And what do a lot of these traders in DeFi want? That's what they want. They don't necessarily care about decentralization as much. And so it'll be an interesting dynamic to look at all these smart contract platforms on a spectrum of less decentralized and more decentralized. And typically more decentralized means higher fees. So to see which protocols people, kind of flock to will be very interesting. Solana, I think, is probably the breakout winner here because with Solana, I think they found a very sweet spot in trading off decentralization for throughput versus Ethereum, which is kind of in a weird spot between both. It's between Solana and Bitcoin. So it's trying to be sound money, but it's not sound money. And it's trying to be this ultimate smart contract platform. And it's a good step in that direction. But unfortunately, it has a lot of, it has throughput issues. It has cost issues. And so there's a lot of nuances too, where I know that the more advanced listeners to the show might talk about like, oh, well, there's security spend considerations and these fees aren't necessarily a bad thing. Yeah, I know. I'm just talking about more of the consumer experience of trading or using DeFi protocols and how they perceive the experience. So I'm not delving into the security model intricacies here.
Yeah, and like the big elephant in the room that probably needs a compliment is the free market, right? And what we've seen is Solana roll up in the last 6 months and become, third or fourth largest market cap because they provided a better, more efficient, cheaper service to the market. Whereas back in the day, when I worked at Bankers Trust, there was maybe only 6 other banks globally that would have been able to price the product I was going to sell you. And now anybody can come in with a new protocol and potentially solve a problem. I would agree with you. They seem to have solved the problem the market really needed. Ethereum's tried to solve that while the plane's in flight. The jury's still out whether they ever will go to proof of stake. I had Justin Son of Tron on Friday that said, I don't even think they should go to proof of stake. Just keep doing what they do, which is proof of work for Ethereum, and let the rest of us work on the proof of stake mechanisms because we don't know if it's going to work. What if Ethereum breaks? We don't need that. Now, of course, Justin's talking in his own book a little bit with his Tron network, but I see the point he's making with that. And so by no means you are necessarily a maximalist, right, Dan? Because you're willing to kind of talk about and acknowledge that these other protocols have places in this ecosystem.
Yeah, I would consider myself more of a Bitcoin moderate. I really love Bitcoin. Like the more I understood and read into it, there's so much fascination with like how it got started. It's sort of like immaculate conception. It's, it's perfect monetary policy, it's hard to get excited about other stuff because I put Bitcoin on a pedestal and I compare a lot of other things to it. But I'm certainly open-minded when it comes to other things. And I've definitely explored a lot of the DeFi ecosystem, including like lending and borrowing functions in a decentralized manner, AMMs, automated market making protocols and how those work. I also looked at like governance tokens and how those mechanisms work. So I'd say I'm a more in NFTs as well. I'd say I'm a more open-minded Bitcoiner. I still find Bitcoin the most interesting thing in this space, but I certainly don't think it's a bad thing if people want to go play around with whatever else they'd like. That's totally cool. For me, I think it's ultimately, this is all about being able to do what you want. So yeah, I would call myself more of a Bitcoin moderate.
Yeah, I appreciate you saying that because, I like people that are open-minded to some of those breakthroughs in the market. And the DeFi summer of 2020, that really got my eye. When I saw the massive borrowing and lending, the governance, the token incentives to trade on the platforms. I went back to my days on Wall Street where I would call down to a broker to transact. No one ever said, hey, Brian, how would you also like to own part of the company if you do business with us? I'd be like, what are you talking about? How would you like to do this in a decentralized, non-name give up fashion? Like those options didn't even exist. And I used to call down to the Chicago Board of Trade where there literally were 300 locals that paid $1 million to provide liquidity. Now I'm looking at a protocol that does that via tokens. I mean, again, I was kind of hooked by some of the innovation involved. So I appreciate you being a moderate. I do want to shout out Max Kaiser for stop being a maximalist, Max, and come on my show. He refuses to because I say the word DeFi. And, even Michael Saylor admitted that there's a real place for stable coins and digital currencies on top of digital property. So I appreciate you having that conversation at least. And it's going to be interesting to see, we're all going to benefit from this innovation going forward. And whether some of it kicks over to the Lightning Network, who knows? But this is all upside, I think, because we're building technology, aren't we? And so
yeah,
it's nice to see these people compete.
Yeah, it's with blockchain tech, it's always very interesting to see sort of the trade-offs people make, because it's not like regular software where you can just optimize for throughput and expressiveness without any other considerations. With decentralized tech, you've got to think through sort of wartime scenarios. How do these protocols work if they're being attacked or challenged? And so, I would say like it's extremely exciting to see a lot of these innovations, right? A lot of these offer novel incentivization mechanisms that, Bitcoin itself has an incentivization mechanism, which is the supply issuance. Less and less Bitcoin are being issued, and there's more and more demand for it. And Satoshi hypothesized that might meme Bitcoin into existence, for people to have FOMO and they buy an expectation of there being less and less Bitcoin in the future. So Bitcoin itself has novel incentivization mechanisms built in. So do a lot of these other protocols. One word of caution that I would have, it's extremely interesting, extremely cool. There are structural issues that I think are kind of like under addressed in the space, where, for example, a huge portion of DeFi smart contracts in the Ethereum ecosystem are basically backed by USDC and USDT, which are two centralized stablecoins. These stablecoins can be seized, frozen, or moved under a centralized control. So because of the expressiveness of these protocols, a smart contract based on those two centralized stablecoins, there's other smart contracts based on that smart contract, and the composability, where there's smart contracts on smart contracts. So there is a risk here in terms of the centralized stablecoins being used as collateral at the heart of some of these ecosystems, where these and other things I think are very, very centralized sort of risk structures. That doesn't invalidate all the really exciting things going on in this space, but I think folks should be aware that there are, these aren't perfectly decentralized. There's a lot of like semi-centralized structures that are embedded in there, and we don't really know what that represents risk-wise.
Yeah, no, really well said. I always tell my students, just because it says USD doesn't mean it's a dollar. It doesn't, it might behave like a dollar, but it's very different than the dollar you hold in your pocket or in your bank account in the US. And just be aware of that. There's risk and there's return on the back of it. I think that's a good point you make. It could be a weak link that sometimes gets overlooked, and there's massive volumes going through in those stable coins. I want to ask you quickly about your thoughts on the media, this concept of, fear, uncertainty, and doubt in this market, and even some of the messaging we get from regulators. I mentioned Gary Gensler, who I've been doing a serious character study on.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.